Muadh with Muadh.com with a weekend market analysis for the weekend of May 2nd and May 3rd, 2015. Let's take a look at how the US markets closed on Friday. We see a 1% gain in the Dow, NASDAQ, S&P 500. We see that crude oil was down slightly, about 0.72%, and the VIX was down about 12-13%. For the week, the S&P 500 was down 0.44%. For the week, the NASDAQ was down 1.7%. And for the week, the Dow was down slightly, down only 0.31%. So let's go straight to the chart analysis. We begin by taking a look at the NASDAQ Weekly, and we can see that at the conclusion of the week, we did close below the previous weekly breakout level of 5,026.42. So as of this weekend's close, this market has failed the breakout. So that's a failed breakout for now, and we'll see whether the market is going to continue lower on a weekly basis or if it finally manages to get back above that level short term. Now keep in mind, I have a surprise for you guys in some sorts, because there are some charts that show a very different look, because on the weekly we see a failed breakout. I'll show you a chart towards the end that shows a totally different view of what the markets are looking to do. For now, if we take a look at the NASDAQ Weekly, we can see that the line where we were talking about the last couple of weeks, if you recall, this line on the weekly RSI, where the market has been struggling, so it came back this week after closing at new breakout levels last week. This week, resistance was seen again here, and at the end of this week, we did close exactly on the lower side of this wedge. So eventually we are either gonna break out or break down from this wedge for the next big swing trade. So keep watching that. We are still watching that to see which way the market eventually decides to go. Take a look at the NASDAQ Daily. Yesterday on Thursday, I was thinking, and I did share this with subscribers, that a couple of things. I thought the market had come back to this level here where we could see support, and that's exactly what we got today, being, I guess, on Friday. Nice support on the line that has been holding this market together the last couple of months. So on this lows, again, we've come here, we hit that level. The market had a nice up 1% day because we moved the daily RSI back above 50. Just like we had a big down day on Thursday because the markets were moving below 50 on the daily time frame, we had the opposite, which is the market moving above 50 on Friday for another up or big move in the market. Net, we can see that right now we are holding very well around the 50-day moving average. So that's a good market for now. Let's take a look at the Dow Weekly. And the Dow has, throughout the last couple of weeks, failed to break out. So let's keep that in mind. We haven't seen a successful close above 18,140.44. If the market is to see higher prices, it needs to take out that previous and current all-time weekly closing high of 18,140. We take a look at the RSI, and we see that we still have this wedge developing. Eventually we are going to decide which way to go by way of either a breakout or a breakdown, and that wedge has been forming over the last couple of months and weeks, so it's been taking a while, taking its time, but eventually it's going to resolve. We take a look at the Dow closing back above the 50-day moving average, which is good. We also see that the Dow did come back to test this lows line here on the price, which held. So as of the close of Friday, that held, which is good for bulls. And if we take a look at the RSI, now keep in mind the most recent slide this week, the market seemed like it was going down on most of the week, mainly because it had come back to this top side on the Dow, and we had seen resistance here, so we were expecting some type of pullback. We got that, but the market came back to the opposite side of the equation, which is showing support on this bottom side. So we are still in a wedge. We came back to the support line there and held and recorded a nice day. Why? Because the Dow moved its RSI back above 50 on the daily time frame. Take a look at the Dow hourly. Now this Dow hourly chart has been amazing in telling us what the market wants to do short term. As you can see, if we take the line connecting the previous and the current RSI short-term highs on the hourly, you can see that when we came here, we did see a couple of days of resistance there, which happens to be this level here. And over the last week or so, we came here, we did show resistance, which also told us that more than likely we're going to pull back, and we did pull back there. Now we are looking at the market as of Thursday. Some of us were expecting a move back high in the market because of this support line coming in play. So we had seen that the market had come back to test this line and could find stability there and support. We also see that it came back to this line where it's been bouncing, and I've been talking about this last couple of weeks. Every time the market comes to this level and moves back above it, the market has a nice rally. Now if we take a look at the transports weekly chart, so the Dow Transports weekly, we can see that as long as the Dow Transports holding above this line, and this line was the previous line connecting the resistance points, and once we broke out here, the market went on a nice run as far as the Dow Transports are concerned. Since then, market's been using the same line for support, and I've been talking about this for a while. This is where the market has been finding support, or at least as far as the Dow Transports are concerned. We came here, we did bounce off that, which was here, and now we seem to be holding above that. As long as the Dow Transports are holding above this line on the weekly, the market should be good. We also did close back on the wedge here, or at least the price channel continues to hold, and we also managed to close above 2015 weekly closing lows at 86.49. So as long as the market is holding above the 2015 weekly closing lows, the market should be good. So support is being confirmed also on the Dow Transports. If we take a look at the Dow Transports daily, we can see that if you recall last weekend's market analysis video, we were trading somewhere here at the highs of this recent highs over the last month or so, but we had come back to a line connecting the tops. Remember, I talked about this could be resistance, and it did prove to be resistance, and also we talked about the other line going this way. So this line also has been resistance for the transports going back to last year. So resistance there, we see resistance here, which can be confirmed by this high short term. Again, resistance on that line, which is this highs, and on and on. So again, we saw resistance here, which is here. So most recently this pullback makes sense. Now we are looking at where the market has been finding support, which is this line there. As you can see, even the major drops like this drop here, the market went below the line and back above it with uniform activity, so that was a buy. You can see support here for this low, support on the line here for this low, and you can see recently we came here as an example and we did seem to hold. Also, we are holding above this general band of support where the market has come over the last couple of months, going back to November of last year, 2014. Market's been bringing the Dow Transports here, and somehow they've managed to hold. So as long as this line is holding, it gives those who want the market to move higher some hope. Otherwise, if you're a bear, you'd really want this market to break that band of support and to start taking this market lower. Otherwise, for now, most things are pointing to a market that is stabilizing. And even if you draw a line connecting recent lows like this, you can see that it connects nicely with this low, this low, this low, and the low coming into Friday's trade. So now let's take a look at the S&P 500 weekly, and we can see the S&P 500 did close below the previous all-time weekly closing low. So this breakout from last week seemed to have failed because we are below 2,110. So that's a failed breakout on the weekly. We'll see what that means long term. Otherwise, for now, the close back below that level shows that this was a failed breakout attempt. We can also see that on the weekly, this is resistance line, just like the Dow and the NASDAQ. Eventually, we're going to have to resolve by moving either outside of this wedge for a positive move higher, or below this wedge for a bearish move lower. We've been talking about that last couple of weekends, so I'm sure that's not new. If we take a look at the S&P 500 daily, we did bounce off the 50-day moving average. We had a nice session on Friday because we jumped above 50 on the daily time frame, and the RSI came back to a line of support we were watching on Thursday, which is here. So the bounce on Friday did make a lot of sense. Now, if we take a look at the S&P 500 hourly, just want to show you a simple line that gave a lot of us who are watching this some reason to think the market would bounce again because of this simple line connecting the lows on the hourly like that. And if you don't see this in your charts, it's because I am using RSI period of 21 on this one. So that could be the reason. But again, it's a very simple line connecting the lows like that. And once the market hit that, as of late Thursday, we were suspecting the market could bounce. Also, the market had come back to this line here where it's been bouncing during recent pullbacks. For example, it bounced off this line here for a nice re-entry, bounced here again for a nice move higher, bounced back above that line for a nice move higher. So the support did make sense. Friday's move also made a lot of sense. Another view of this is by taking a look at the S&P 500 hourly chart. And again, we are using RSI period of 21. All right. And if you take the lows of the RSI here and here and here, you can see that the market did find support precisely on these lows coming into Friday. So that's another reason why we were suspecting the market could move higher. Were we sure? No. You're never sure because the market can always change its mind. All right, let's take a look here at Apple. And I have a surprising view for you guys because it seemed like it was cracking down this month on the weekly. But if you take a look at the monthly, you can see that because we've only had 1 month of trading, or 1 day of trading this month, which being the first day of May, we are now back above the previous weekly and all-time weekly closing high of 128.46. So as long as the Apple is holding above 128.46 on the monthly, this is a fresh monthly breakout. Even though it failed last month, now it's giving it another try. So with the stock holding above 128.46, the previous all-time monthly closing high, look out, the stock could be going higher. I do like the fact that the RSI on the monthly continues to hold above 69.1, and it's been holding above 69.1 going back to 2014, summer of 2014. So it continues to act well, even though it had a slightly bearish week. It is positive for the month now and breaking out, so that's a surprise. If you take a look at the daily did come back to the support line we've been drawing. Very simple line again, just like the other markets, connecting all these lows. Simple line on the daily, and it connects all these lows nicely and came back here, held, had a good session on Friday, up 3%. Why? Because the RSI on the daily recaptured the 50 level. That's why. We also see that the 50-day moving average also held. So again, the key here is what the stock is doing on a monthly chart, and on the monthly it is breaking out above 128.46, which actually is very bullish for the general market. Now I want to show you the biggest reason why coming into Friday I was thinking the market could move higher, and I shared this with subscribers on Thursday, and it was a simple line that we've been watching. If you've been watching my weekend analysis videos, you know this to be true. The VIX came back at the highs of, let's call it Thursday, when the market was at the highs, or at the market at the lows, VIX at the highs. The VIX was showing potential breakout or resistance, but keep in mind it's been stalling on this level, which is the VIX, and every time it stalls you have to go along the general market, or at least remain bullish. So it came back again as of late Thursday and was showing potential to resist there. So that was our first inkling that the market could move higher. And then secondly, we saw that if you take the line connecting the highs and extend it, all these highs, so the line connecting the highs here through here, connecting this high and this high, that the market came back and hit that line very nicely. So we were thinking that is indication yet again that the market was going to bounce, and we did get that bounce on Friday. Keep in mind in this one, not to confuse you, but the RSI is 26. Yeah, I mean I changed them a lot, but this one has remained constant, so don't get too confused. You can use 21 or 26, it makes no difference. In fact, I can prove it to you. Alright, let's take a look at RSI period of, this is, hold on a second. So let's change the period here from 26. As you can see right now it's set at 26. I want to change it here to 21, just to show you that you can use 21 or 26. Really makes no difference. And so this is now RSI period of 21, as you can see. And let's see whether it makes sense. Alright, number one, let's take a look at the highs. Take the highs, draw a straight line. Does it show resistance here? Of course it does. Alright, let's draw the red line again, see whether it makes sense. And we can see that if we take the line there like that, it gives us the tops, most recent tops in the market. As you can see, all these highs come on the line, so no need to go through all of them, but you get the point. So you can either use 26 or 21. Point being that the VIX was telling us that the market could come back to life, and it did. Now, I want to conclude here by taking a look at the monthly charts for the main averages, and they're going to surprise you, because even though we've had 1 month, there I go again, 1 day of trading for the month of May, alright, we are breaking out on the monthly, or at least very close to breaking out on the monthly for the S&P 500, which needs to be above 2,104.50. As you can see, it is above that. So this is a monthly breakout that we need to respect. As long as the market is holding above 2104.50, be on the lookout for higher prices. Keep in mind, the RSI is reclaiming the level back above 69.1 on the S&P 500. So as long as we are holding above this and breaking out on the monthly, watch out for higher prices. Let's take a look at that. Is as long as that breakout is in play. Take a look at the NASDAQ, and on the NASDAQ monthly, surprise, we are also right now, after 1 day of trading for this month, above the previous recent all-time monthly closing high. And for the NASDAQ, the price level there is 49.63.53. As long as the NASDAQ is holding above this, you have to remain bullish. Just keep that in mind. If it moves back below that number, then maybe we can start looking for reasons to be bearish. But for now, as long as the market is holding above 49.63.53, this market is going higher and much higher. Also keep in mind the RSI continues to be very strong. It's been strong and holding above 69.1 all the way back to about May of last year. In fact, May of 2013, So this is 2 years in the making. Year number 1, year number 2, over the last 2 years, the NASDAQ has remained above 69.10 on the monthly. And that's why we've had this nice run. Amazing. 2 years. That is amazing, I have to say. We take a look at the Dow on the monthly. And on the monthly, the Dow has yet to break out on the monthly. So let's watch for that. If the Dow can move back above recent monthly closing highs, all-time monthly closing highs of 18,132.70. If it can move above that, that's going to be a fresh breakout. We also need to see whether the Dow can move above 69.1. If it does move above that, and if it can break out in price, watch out, this market is going higher. Otherwise, I hope you've had a chance to take a look at my world market analysis video. So if you haven't seen my world market analysis video, it should be on my YouTube channel, and I should have subscribers, or I should send subscribers part 2 of this weekend market analysis, where I discuss US sectors and some select individual stock picks. Otherwise, have a great weekend. Be on the lookout for part 2 of this weekend analysis video by logging into www.muathe.com. Otherwise, enjoy your weekend. Eric Muathe, good luck as always. Peace and blessings. EACS. Woo!